Welcome back, everyone. You know what this means. It's the start of earnings season. And it always kicks off with the big banks these days, and it will this time as well. But I brought a couple other companies that I thought you should watch in this very first week of earnings because they kind of represent what else is going on out there in the economy. So let's dive right in. So the first company I wanted to feature is Fastenal. We've talked about them off and on over the years. They are the big fastener company and also big in both manufacturing and on the construction side. And you can see they have an excellent earnings surprise track record. Their last miss was actually just before the pandemic hit. And then they've been perfect ever since, either meeting or beating. So those little green arrows, when they're very small like that, could mean that they met. But that's good enough for us. So they have this great track record, and the shares have taken off bigly in the last 2 years, right? They've stormed out to new all-time highs. Year to date, the shares are up 16.5%. 5 years up 67.7% now. PE, though, now trading at 35 times. So I've loved Fastenal for many years, but as the value stock strategist, I could never get in it, even when it's pulled back. And now it's more expensive than ever. Can this stock keep running? What are they going to say this earnings season, because they are a barometer for manufacturing. And that looks like it's coming out of the doldrums from the past 18 months. So this is definitely one I'm going to be tuning into this week. The next company is one I don't think we've ever covered here on the Earnings All-Stars, but I decided to cover it because it's Lovesac, ticker LOVE, L-O-V-E, but this is on the furniture side. And furniture, as you can see from this chart, it boomed during the pandemic. We were all racing out to buy the new couch. But now that's kind of over with housing really slowing here the last 2 years. So you can see the shares are just kind of treading water. Actually, year to date, they're down 5.6%, and they're now down 41% over the last 5 years. But they've beat 3 out of the last 4, and they've just missed one time since the pandemic started. And it was this one miss here in 2023, right there. And it was barely a miss, just 0.6% of a miss there. So this is a big beat here the last quarter, and 51% beat. But the share's still not really going anywhere because no one really trusts that, the housing market is going to come back enough. But the stock is cheap. It's trading at 11 times. And this is a small cap. So if we are waiting for those small caps to take off, this is one that's going to have to join in on that. But I like the furniture companies here. I like to see what they're saying. It's been pretty positive about 2024 so far from many of these companies, because they are starting to see it pick up a little bit here. But will that be the case for Lovesac? We will see. Then we are switching over to the banks. So we are getting those big banks to lead us off at the end of the week. And of course, all eyes are going to be on JP Morgan. It is the most premier bank out of the big banks. And you can see why from this chart. So they have a good earnings surprise track record. They've beaten 6 in a row, and now these shares have taken off to new all-time highs. Year to date, up 15.4%, and 5 years up 76.6%. So that's even beating Fastenal, which has been pretty red hot. And this is all going on at a time when the banks were having a banking crisis just last year. But JP Morgan Chase is considered the safe big bank. And it's got Jamie Dimon at the helm for now. He's still there. So this is one where investors feel pretty safe piling in with the money. And the chart basically reflects that. So what will happen this quarter? And will Jamie Dimon give us some good insights? He's already released like a a note of his insights. Will he say something that will move the stock even higher? We will see. Then I wanted to cover one of the banks that doesn't look like this chart. Also, one of the big banks, Citigroup. So Citigroup having a little bit more of troubles of late, but not on the earnings beat and surprise. It actually has a much better track record than JP Morgan. Just one miss in the last 5 years. That's really impressive. But the street hasn't really rewarded it. You can see that stock hit new lows or just right around those pandemic lows there in October of last year before the big rally. So year to date, it's up 19.4%, but over the last 5 years, still remains down 37%. So still a ways to go for Citigroup. And remember, Citigroup, a little much more on the international banking side than some of the other big U.S. banks like JP Morgan or certainly Bank of America. So that's another factor you have to keep in mind when you are considering Citigroup. And it also pays one of the higher dividends, which is now yielding 3.4%. So we're going to wrap it up, not with another bank, although we are going to get some more, including Wells Fargo, but we're going to wrap it up with an insurance company, the Progressive, ticker PGR. And look at this chart. Its earnings surprise track record isn't that great, but it has managed to put together 2 decent-sized beats in a row the last 2 quarters. But look at these shares taking off, now near or at all-time highs. Year to date, up 29%. We're only in April, so that's pretty hot. That's looking almost like a technology chart here. Progressive is insurance, as I mentioned. It's home and auto. But as many of us know, in certain parts of the country, insurance rates are up on especially home insurance. So what will they say this quarter? It's trading at 21 times. So that's not cheap. It's not as expensive as Fastenal. But can this stock keep rallying to new all-time highs here as well in 2024? We will soon find out. So as you can see, it's not just about the banks this week. We are going to get some insights into some of the other areas that we all should be watching, especially with Fastenal, I feel, because that's manufacturing/construction. They haven't been warning at all about manufacturing in recent quarters, but will they be trumpeting that things are turning around on that side? We will see. And as always, I'm going to be bringing you all of these earnings charts throughout earnings season, including the big tech stocks, the Magnificent Seven, and all of those. So you want to be sure to get them all. Get them on Zacks.com/YouTube. You can check out our YouTube channel there. I know many of you will get them there. I'll also tweet out these videos, and I'll be tweeting out even more earnings charts like these about stocks that I just can't fit into these videos. So be sure to follow me on Twitter or StockTwits. I will post both of them there on both platforms. And it's just at my name, at Tracy Reineck on both of those platforms. But as always, this could be a very interesting earnings season. Analysts are expecting earnings to grow 2.5% on the S&P 500 for the first quarter. Will we get that kind of growth? We're going to find out. So be sure to subscribe, and I'll see you again next week with some more earnings charts.